Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1T10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, everybody. Good morning, good afternoon. Welcome back. Hope you're doing well. Today is Tuesday, second day of the week, 2 days into the trading week. Hope you're surviving so far. Markets are pretty quiet to start out the week. Of course, we had the beginning of this week with the U.S. President's Day, so markets were a little bit quiet yesterday. But I imagine things are going to start picking up here. Taking a look just real quick on what is on the radar. We had some UK data that came in overnight. Actually, jobs data coming in a little bit soft here for the UK. Well, actually, interesting. Hold on. So number of people claiming unemployment came in higher than expected. So we have 22,000 compared to the forecasted 10. So some interesting data out of the UK. We'll check on the pound, see if that's moving that currency at all. CAD CPI here also this morning, coming in a little higher than expected. So some high inflation there. And then kind of following suit recently with US inflation, we also have Trump speaking today, and we have this evening the RBNZ putting out their rate policy stuff, so interest rates. So could be a market moving type of day, but we'll see. So far, markets are moving here. You've got the NASDAQ poking higher here to fresh all-time highs, although it's kind of a whimpering all-time high. It's not like a massive upshoot through those highs. Still a new high. So NASDAQ is pushing higher here. You've got the the S&P 500 trailing a bit as well. So positive gains here for stocks, at least to start out today. U.S. stock market opens up in 4 minutes, though, so a little too soon to call anything at this time. You've got the Dow Jones here down about 0.25%, and another day, another win for gold, it seems, up 0.81%. Gold looks absolutely strong. And I don't know if you guys saw this. You might have been in I made a little meme. I was kind of proud of it this morning in the Telegram channel. Check this out. You ready? No way gold keeps going higher. Gold. Is that not a terrifying, cool looking golden dragon? Saw that image and I had to make this little quick meme for you guys. You know, I'm a memer. If you're not in the Telegram, by the way, you should join us. We share bonus clips, extra content, free course material, grade A memes that will just make your day brighter. So if you're not already in there, Cold J says, has Nick been hitting the gym? I dropped my gym routine in there. We're putting it all in the Telegram. So join there if you have not already. We'll drop the link here in the chat. Chandler James, if you guys don't mind, for us to share that with people. Make sure to take a second and join the free to join Telegram channel. Again, tons of value there beyond just what you see in the streams. So that link can be found in the description, or if one of you guys could drop it here for the chat, that would be awesome. S&P 500, there it is. Thank you very much. So S&P 500 slightly higher here. NASDAQ slightly higher here. Technology's had a little bit of a comeback here recently, but the big story recently for indices has been some foreign stock markets ripping here. So we can go around the room here a little bit, talk about Chinese stocks up massive here. Take a look at the DAX, up huge, right? Maybe a little bit of optimism that the conflict in Eastern Europe hopefully will come to a close. That may be what the market here is sensing. But I wouldn't go so far as to say like, oh, it's all rosy and sunshine either, because you got to ask the question, why is gold up so much? There's some interesting stuff going on in the gold world. Have you guys caught up with this? Have you been keeping up with the whole Fort Knox audit and all that drama and all that stuff of like, how much gold does the US really have, and why is London selling so much of their gold? And that's a fun drama conspiracy rabbit hole you can go down. But regardless, I think that there is just this. We know that regardless of whether you entertain that or not, central banks are and have been buying gold aggressively, and it seems like a de-dollarization slow motion event is sort of taking place. Um, you guys know I'm a long-term bull when it comes to gold and silver. Uh, I think that it has plenty of room to continue higher, and people are kind of all over the place on social media saying like, oh, gold's gotta it's gotta come back, it's due for a pullback, it's gonna sell off. And you know what, maybe it does, but that is certainly not something I'm trying to call or time. I would not be surprised if we just continue this momentum right on up into the three handle. If we see a move to 3,000, I would not even be surprised. Now, that is not financial advice. As always, you guys know I'm not here to tell you what to do with your trading account. But for me personally, I like the metals. I still think they have upside, and I have a systematic reason for thinking so. I am and have been bullish on gold and silver. They remain the top setups on the Edge Finder. This has been a very solid call here recently, and I stay with the trade. Gold flipped. I can't remember the exact day. I want to say February 5th was the day that the Edge Finder started pointing more bullishness. And at that time, people were like, what? So the Edge Finder is getting bullish now? Well, look, I mean, it's still going, right? So sometimes it's actually easier to join a train that's moving than to try and jump in front of one and call a reversal. And so, these little intraday dips have been wonderful, for the 4-hour chart traders, the 1-hour traders. These dips may have been really nice opportunities just to continue to play this long side action. Again, we don't know where this thing is going to end. A lot of traders are going to get themselves into trouble trying to call the top on the metals. Again, I literally made a meme for this morning. No way gold keeps going up. Gold looks like this. I mean, it is a scary beast of a chart right now, and this is not a chart I want to short. If you are the brave soul facing up against the dragon, there's a graveyard full of traders surrounding you, right? There's so many people who have tried to call the top on gold, and to try and be the next one. Be my guest, do your thing. Maybe you are the one in 100 traders that gets it right, but that mindset of thinking like, oh, I'm the one who's going to call the top on gold, you are braver than I have humbled myself in the markets enough times to realize, like, when the market is just trending, you don't try to call the top. It's very, very difficult to do when something's moving with a ton of momentum. Similarly, a lot of people are trying to call the top on this stock, Meta. This thing has been a beast, right? Meta's been an absolute monster. A lot of people have been trying to say, oh, Meta's due for a big correction. I'm not saying that it doesn't, it couldn't use a nice healthy pullback. I'm not saying that. But you trying to say, I'm going to call the top, it's going to pull back, is different than saying it's probably due for one, but it doesn't have to. Like, it could. So here's the thing. Like, if I'm looking at Meta or gold or something that's just moving like a beast, right? It could pull back today, but I also could see it pulling back tomorrow or the day after that or the day after that. But me saying it's going to pull back today, I've been beaten up by the markets too many times in my life to truly believe I can call where a market is going to top. You know what's crazy? I think realizing that you can't call the market that perfectly is a key cornerstone moment for any profitable trader. Profitable traders don't insist that they can call what the market's going to do next. Fools do that. The market is bigger than any one of us, right? It's difficult to time this stuff. It's difficult to call this move. I'm a metals bull because I have confirmation from the Edge Finder and momentum. I am a trader that trades momentum. Until momentum fades, I don't call the top. Does this make sense? Are we on the same page? Anybody else feeling the same way with metals? Can we just have a humble pie here today together and just say, look, I don't know where the top is. I don't know. I'm not gonna, because man, so many traders get themselves into so much trouble trying to short markets that are ripping. I can't tell you how many times I've seen index traders, probably the worst. This is probably the worst. Is I have had comments in my YouTube channel, guys, for years, 6 years. I started this YouTube channel in 2018. So what has it been? Let's call it 6 years because I started late 2018. 6 years of people saying stock market's going to crash. Stock market's going to crash. This is the top. This is the top. Chanting that this is going to be the moment that the stock market crashes. This thing has been in a secular, strong, upward bull market for several years. Now, you've had 2 years of up market, right? 2022 was more of a bearish market. Lo and behold, it was easier to try and call a bearish continuation after it started to crack than before. If you were calling for a bearish move, you're just making noise, right? Trend following. I'm a big believer when I talk about ideas that I have in the market. Trend following, think about the word. Think about the expression that we're saying. Trend following. You're not trend leading. You're not saying this is when the trend ends. Trend following for me means I don't take profits just because we've had a move higher. I'm following the trend. If the trend is still up, I'm still in the trade. Now, that's just the technical side. The trend on the fundamental side is what matters. That's the true driver. That's what's going to give follow through, right? You want to talk about fake outs and follow through moves. Follow through usually goes with fundamentals. Strong fundamentals for a story, I would argue, like gold and silver right now, have potential to continue to follow through. They've been following through, but I think they continue to follow through. Meanwhile, traders are going to call the top. They're going to try and call the top over and over and over. And I just think, again, the sooner we accept that we don't know the tops of trends, the better off we are. Does that make sense? Hopefully that resonated with someone out there. I heard it, probably 10 years ago. I was listening to somebody talk about something just like this, and it resonated with me like no other. He said, the second I realized I need to just stop fighting trends and just go with them, trading got a little bit easier. It's not a magic pill. Oh, just follow the trend, you're going to make money. It's not that easy. You still, in my experience, you need to have fundamentals. You need to have reasons for your trade. You need to have risk management, psychology, discipline. Proper position sizing is so critical. There's so much to becoming profitable, but one of the simplest things that you can change, in my experience, that has really truly helped me is don't fight trends, right? So I'm still long silver. I like gold a lot too. I actually don't even like, this is going to sound like insanity, but you give me a pullback on gold, I'm probably going to try here. I'd also try if we get a bigger discount, but I don't see anywhere better right now than gold. And I am not telling you to do that. You guys know, I always mention this. This is not financial advice. I'm not here to do your homework, is what I like to say. I'm doing my own trading. These are my opinions. For me personally, I don't see anywhere better than gold right now to the upside. And it doesn't mean it can't have a big sell-off, and it's not a perfect, guarantee it's going to keep going higher. But the probabilities for me that we move higher for gold are good. I don't think this move is done. As crazy as that might sound, people are out there everywhere on social media. Gold's got to pull back. Gold's got to pull back. I don't think so. Maybe it does. Maybe I'm wrong. Like, wouldn't be the first time. But I don't think my comment section is full of people saying, oh, gold's at the top. Gold looks great. Our indicators here are flashing. They've been bullish, right? If you've been fighting this call, you've been on the wrong side. Gold looks good. Trend is to the upside. Seasonally, the early part of the year is really strong. You want to see that? You want to see why the edge finder is bullish? We can talk about it. It's not even rocket science. Gold is positive most of the time early in the year. If you're ignoring fundamentals and data, it's going to bite you in the butt. Don't ignore this stuff. This is straight up simplicity, like simple things that you can add to your trading to add some insights that really might change things for you. If you found yourself super short gold into the early parts of the year, obviously this is not the only thing we want to look at, but seasonally, even if I was bearish, the edge finder would have told me, no, you don't short early in the year, because the edge finder tracks this data and it goes right into our top setups algorithm. You would not have caught me short gold into the beginning of the year, because seasonally it is a very strong period for gold. So even if a lot of other things here were bearish, this indicator would dock the score by it would add score, right? It would add bullishness to the total score. Again, using data can make or save you a ton of money if you use it appropriately, manage risk, and consider things that are really important. Seasonality is a real thing in markets. That's part of my trading approach. If you don't have the Edge Finder and you'd like to try it for 30 days, we'll drop a link here in the chat, by the way, to where you can apply for a 30-day trial of the software. This gets you a chance to try the software, see if it's right before you commit the full price of the tool. Please note that our trials are not free. It is $199 for 30 days access to our software. What this does is it allows us on our team to invest time and energy. We have a support team that handles trials on a manual one-to-one basis. So someone from our team will guide you through the software. They'll share some information with you. They'll grant you access. They'll follow up with you to make sure everything is clicking. And if it's not, they'll help you. So we do trials. And for that time, we do charge a small fee. The other thing that's cool about our trials is when you pay for a trial with us, it gets credited towards your final purchase at any point in the future that you decide you'd like to purchase the rest of the product. We also offer lifetime prices. So what that means is that you pay once for the software. Most companies do not do that. We do that because if you're a long-term, serious, dedicated trader, this tool, if you plan to use it for the next 5 years, is dirt cheap. If you take it by a monthly basis times 5 years, 10 years, it's dirt cheap, right? Now it's a one-time upfront fee. The reason we do that is we take that money and that's what funds our development, right? So we've built this tool dramatically off of the, we've reinvested tons of the money that goes into purchases, right? So when people buy the software, it goes right into, a lot of it goes into development of future tools and improving it. So yeah, if you don't have a copy and you'd like some information about how you can get a trial, we dropped a link here in the chat to where you can do that. Maybe we can drop that link one more time just to get it to the bottom of the chat. Hey, James. Hey, Lee. Ball Out. Bashy. All of our regulars are in the house. Thank you. I know there's more regulars. Shout out to you guys as well. So, yeah, I mean, right now we've got stocks flat on the morning here, sitting at all-time highs. We'll see. We'll see. I mean, I think you need something. If you're going to get another leg up on equities, you've got to see something new, something exciting. Is it going to be NVIDIA earnings? Could NVIDIA earnings reverse this? It's possible, right? For me right now with indices, they're just very neutral. I just don't have a bias one way or the other. So just like I had a neutral reading on gold a couple months ago, now I have a strong reading on gold and silver and a neutral reading on indices. So we can actually filter this out and take out neutral readings. This is pretty much my watch list right now. I do also have a short position on Swiss yen. We could take a look at that as well. Let's see what we've got. Swiss yen here. So I have a short position on Swiss yen. It's very slightly in green or in blue, depending on which brokerage you're on. But nice start here for Swiss yen. I would like to see some follow through to the downside here. But Swiss yen continues to be a bearish reading on the edge finder, as most of the yen pairs do. Dollar yen bearish, Swiss yen, Euro yen, Kiwi yen, CAD yen. You know what I also thought was interesting is you've got Russell getting a bearish reading. It's only a -5, which is a bearish reading, but I do like when I see stuff getting more into like the -7s, -8s, -9s, or 7, 8, 9. That's just a little bit stronger of a reading. More things are, if something's getting a +5 or a -5 on the edge finder, it's still a valid setup for me if I can find the right technical entry. But a 5 is very possible to dip back down into neutral, right? Whereas a 7 or an 8 or a 10 has much more room to lose a couple points on something here and still be a bullish reading, right? Check out UJ. Good buy at the moment. Let's take a look at UJ. I don't really like any of the yen crosses for bullish setups. This one looks still like it's got momentum to the downside, but we'll see. I mean, if you are a buyer of dollar yen, right, you do have this level of support. Let's see if that holds, or if we're going to go test down here around 149.50. I personally would not trade dollar yen, just myself, because the swap fee is very expensive if I'm going to short. And it is if you're bullish on yen crosses, dollar yen does pay you out pretty nicely for holding it positive swap. For me, Swiss yen is still the path of least resistance to the downside on yen crosses. I like this trade. So we'll see. But yeah, I mean, yen looks really strong to me. We have this new Japanese economic heat map. Here's the thing with the yen, and I'm glad that it loaded up here properly today. Yesterday, the Edge Finder was being so slow because of Google's delay or their server, whatever. Unemployment rate came in lower than expected. So that's strong for Japan. Okay, employed people came in better than expected. Strong for Japan. PPI, this is strong for the yen, by the way. Even though this is red, if we're talking about yen for a second, check this out. The Japanese yen saw PPI go up to 4.2 compared to 4. Strong for the yen. Inflation rate came up to 3.6 from 3.2. Strong for the yen. Retail sales numbers came in hot. Strong for the yen. Services PMIs came in hot. Strong for the yen. Manufacturing PMIs missed. Weak for the yen. GDP growth came in much better than expected. Strong for the yen. The yen to me, I'm not telling anyone what they should do, right? And this is not financial advice. I like the yen. I think it has upside. I could be wrong, right? That's the thing about markets is all this can look great for the yen and yet still could reverse. But for me, the path of least resistance when looking at the Japanese yen is more yen strength. I also like TLT for the same reason. They have some positive correlation. If you do get a little bit of a global kind of shift in money where people are flowing into the Japanese yen, which is a little bit of a risk off type money flow, the TLT could also benefit. They're very correlated. If you correlate TLT to JXY on your own chart. In fact, I'll just show you correlation coefficient, and let's go TLT to JXY. And what we can see here is that this has some pretty good correlation. Let's go weekly chart maybe. Yeah, so you can see it's pretty high correlation. Let's call it somewhere around the 0.8 correlation. So it's pretty correlated. It's not perfect, but I like TLT for the same reason as I like yen. I haven't been bullish on the yen in a long time, but these readings are also very impressive, right? The Japanese yen has had a resurgence in economic data. Bank of Japan is thrilled about this. They actually want to hike rates, and they're thrilled about this. You're getting inflation, you're getting growth. They're like, heck yes, we can actually start to. They have a different scenario, a different playbook than the Western countries that are looking to cut rates and try and keep inflation down. Japan actually wants to see some inflation, data come in hot. It gives them the room to hike rates and to strengthen the Japanese yen again against other currencies, which is something they actually want to happen. So I haven't been a believer in the Japanese yen in some time, but you're getting some data here that I would say suggests you might have more upside for Japanese yen. Again, dollar yen, to be completely fair, however, is not one that I'm looking to short. I think that the dollar yen is a very costly one to short on a swap basis. And also, I just think there's other currencies that I'd prefer to be bearish on rather than the Japanese yen. I mentioned this a second ago. If you guys would like to get access to the Edge Finder, we have trials available. You can get a 30-day trial for $199. If that is something that you're interested in, we'll drop a link here in the chat to where you can apply for that information. You'll also be connected to a real person on our support team who can get you information about the software. If you are a serious fundamentalist, this year is the year. The Edge Finder has gone crazy. It is, if the Edge Finder had a chart, it would look like this. and it's just going higher from here. Okay, there's a lot of momentum on the Edgefinder's development. Anyways, link is in the chat if you would like to try it out. Up next, we've got Alan, one of our very own here in A1 Trading Show, fan turned contributor, which is just thrilling for us as a team. We love this. Alan has been watching us for a while and now is starting his own YouTube channel, and he's got, I would say, a pretty natural talent for sharing ideas in front of a camera. He may not feel that way, but I certainly can tell when certain people have some natural ability, and I think Alan's great. So stick around, give Alan a shot. He'll go through some charts with you, and I'm really excited to watch some myself. So Alan, take it away, my man, right after this quick break.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
Good morning, everyone. Hope everyone's having a good one. I see some regulars, Kiedis, Lee, Bashy, Ball Out. Good to see you guys here. I saw some comments I wanted to address. Melange, I hope I said that right. You wanted to check the euro, US dollar for bears. And I think someone else wanted to talk about the DXY. So I'll go ahead and look at those real quick. I'm pretty flat. So the only trade I have right now is the Swiss yen, similar to Nick's. It's the one that is the most efficient for yen bullishness. All the other pairs have a high swap fee. And that one's a more long-term. And I think the yen has some really good long-term potential. But as far as the DXY goes, we did see that it broke this 107 level. And I want to see how it holds up. If I'm going to short the euro, I think we can tap this 106 level. We have Trump speaking today. We have some more growth metrics out of the US. And if we get some better growth numbers that come out and inflation continues to stay where it's at, or if it trends upwards, then I do see that the dollar will gain some strength again. But I really want to see how this 107 level holds up. If we go ahead and break above it, then I would probably consider getting into, euro shorts, Australian shorts. Let me see. I will show you the euro. This is where I'm at with the euro. We've seen that before. It has reacted out of this 105 zone here that we have. So I want to see if it continues to hold. It's rejecting it initially, but I'm kind of skeptical, if you will, about it. I think that if we hit this 106 level, it'll be a better risk to reward. Dollar Swiss. Dollar Swiss is a good one to me as well. Let's see here. Let me delete this. We reacted initially to this level of support. But again, I'm still skeptical if it's going to hold or not, like kind of referencing the dollar. If the dollar rejects that 107 level and flushes down to the 106, then I think I can get a better entry for the Swiss. And a better entry to me would be, right around this 0.8900 level. Any more questions? Any more charts? Euro yen. Let's look at euro yen. Euro yen could be a good one to day trade. So when it comes to like these yen pairs, I've done this in the past before. Last year, when the yen initially got some strength, when there was some. Hey James, nice, yeah. When the Bank of Japan intervened, and then whenever they first initially went ahead and hiked their rates, that caused some unwinding in the yen carry trade. And so what I was doing was just day trading the yen very carefully on these pullbacks, because the yen pairs, their pullbacks are pretty nice. They respect levels, and you can get in and out of them. So if you were going to day trade like the euro yen, for the person that went ahead and requested it, I would wait for some pullbacks, and I would also like to wait for the euro to get into a nice level. So let's say the euro goes back to this 105 level and it starts to respect that level, and also the euro yen gets to a nice level that's of support or resistance, then that would be a good contrarian to say, hey, let's go ahead and, short this short term. But holding it long term, it could be quite expensive. So I don't know if I would, go ahead and do that. And then another thing you could look up to line up is if the yen currency index, if that also lines up with that, then that would be a good day trade. Amin, can I explain swaps? Yeah, so swaps is something that you have to pay, or you will get paid from the broker for her holding a currency overnight. I can show you real quick here on the Edge Finder. The Edge Finder has a pretty cool tool to show you the swap for any currency, really. Where are we at here? Carry trade scanner. So if you look up for anything yen related, so basically what you want to look at, and I think someone else also asked how you can calculate the swap fee. So hopefully I get to address this as well. You have your base rate and the quote rate. So for example, US dollar JPY, the US dollar's rate at the moment is 4.5%. Oh, it's not showing on the screen? Okay, 1 second. Let's see how we can fix this. One second here. How about now? We're seeing it now? Hopefully I troubleshooted it correctly. Awesome. Okay. So you have the base rate and the quote rate. And so what you want to see is, for example, the US dollar yen. The US dollar's current rate is 4.5%. And the yen's rate at the moment is 0.5%. So the divergence in the two rates is what you will have to pay or get paid by the broker to hold it overnight. So if we're buying the yen, you will get the spread 4% for each night or each day that you carry it over. And so this has been a thing that a lot of bigger players have been indulging in, because what you can do is transfer money and get into US dollar. And then that's how people buy like bonds for the US and invest. That's how foreign investors invest into like US equities and stuff with big money. If you look at the Swiss yen, the rates are the same. So you don't have to pay anything. And so what I like about the Swiss yen, and I think Nick has talked about this before, but the Swiss wants to eventually get to a flat rate of 0%, while the Japanese yen, they want to continue hiking the rates. And the data is supporting that. They're getting some inflation reads. So that will, help promote that move. And if that does happen, the Swiss yen will be the only one that you actually get a positive swap to short that currency. And so if you're thinking of people that have massive amounts of money where the swap actually means something to them, where, the 0.5% makes a difference and is worth it, then I think the Swiss yen will be the most important or the most attractive when it comes to playing that yen trade. And so I think we're in the early stages of it. I do like that now we can see like more countries. Before I think it was just US and UK, but now we can see the Japan heat map. and it's looking pretty good. You know, if we continue seeing some inflation reads hotter, that would definitely promote more yen strength. Yes, I mean, so holding the currency and getting paid from it, because it sounds really cool, right? So for the US dollar yen, imagine you are being in a trade and you're getting paid just to be in it, right? And then imagine also you're catching the right move and you're profiting from it as well. So you know it's a good trade. It makes sense. But when you're starting to, you know, short something, right, and it's being costly, it eats into the bottom line. So even if you do profit, you know, X amount, your bottom line is going to be affected because of the swap that you have to pay to the broker. Yes. New Zealand US dollar. Let's see here. The swap for the, let's see, I don't know if that one has one. I don't see it here. All right, let me go ahead and switch back to the trading view. All right, let's see. For New Zealand US dollar. So we had we reached this level up here, which was a good level. I think we missed it a little bit, and my zones are not defiant, so take that with a grain of salt. But like I said, I think if we reject that 107 level on the dollar index, then we could have another opportunity to go ahead and short the New Zealand dollar at this more attractive level. I think for most of my, you know, shorts on like the Euro, Australia, New Zealand, I want to wait for better pullbacks. I think we can get them. And with some, you know, upcoming news and, you know, Trump speaking today, I think that we can get some volatility that can help us get, you know, those more attractive entries for sure. Forex James, I don't know if he's coming on. I missed the guy. I like his commentary, but I think he was on vacation or you're doing something. Any more questions about our trade setups or questions about myself, perhaps, that I could answer? Yes, I only trade currencies. My trading style is primarily swing trading, momentum type trading. But when there's moments like this where I'm not really in a big swing position, the COT data was kind of mixed. The momentum has shifted for now, as far as like the, you know, we've been in a dollar bullishness phase, if you will. So when the momentum shifts or the narrative shifts, then my swing trading doesn't work. You know, you have to wait. And so right now I'm pretty flat. The only one I'm in is like the Swiss yen short. So sometimes I do day trade, but my day trading is off of the backs of a like a news catalyst. News catalyst. So for example, let's say I'll use this New Zealand chart for an example, and I'll go over it pretty briefly here. Let's say we're trending downward on the New Zealand dollar, right? And we get a news catalyst, like for example, non-farm payrolls, and the momentum is to the downside. COT supports it. A lot of things support it, but the non-farm payrolls print goes ahead and spikes the price up. If it spikes up, statistically, there's a good chance that price is going to return to its, you know, origin pre news price. And so what I like to do is on the lower time frames, wait for the initial spike to go ahead and start retracing backwards. And when that happens, I go ahead and go short and, target that pre-price of origin. And then once I'm at that level, I get out, because after that, you don't know what's going to happen. It could continue going downwards or not. But that's what I do for day trades. Now, let's say price is, trending downwards, but the new spike pushes it downwards in line with the trend. Then I do not go ahead and, take that mean reversion trade. I see some more questions here. The best site to find the COT data, edgefinder.com or A1 Edgefinder, I would say. But if you don't have an Edgefinder, then you can look at the CFTC website. Every Friday they go ahead and post the filings, but they're very tedious to look at. It's like a big Excel looking thing with a bunch of numbers. Please tell us your journey with trading. Sure. It started in 2018. My dad introduced it to me. He had some previous experience with Forex. And so one day he goes into my room and we open up a conversation about it. And we open up a demo account. We place a trade. We go downstairs to go eat. And then when I come back upstairs, I look at the P&L and it's up $200. And so that was really interesting to me. So I picked it up, and I was in high school at the time, but then I went ahead and dropped it. I neglected it. But when I graduated, that's when I took it more seriously. And so I did like the educational self-education stuff. I found Nick's channel, which helped me a lot. I got a job at a bank, which helped me a lot. And, I started testing strategies on demo and all this stuff and learning the macros. When I learned the macros, that's when things really shifted for me for the better. And then last year, my girlfriend got a job, and we were living together, and the job required her to move out of state. And so I had two options: either find another job at a bank, internally try to get an internal transfer, or take my trading live full time. And so I used that opportunity to, take it full time, and I've been doing it since. And it's been a journey. I'm in my first year and seeing some results, but adjusting to the current environment, which is why I'm looking into currency. I think it's really important to be aware of your environment, because right now, for example, the environment has kind of shifted. The easy trade of just going long dollar or shorting everything else has kind of been disrupted. And so knowing your environment, to stay away and you know what to look for. That's really important. I made the analogy of like basketball. Let's say like you're a big sports fan and you have your favorite basketball team and the players in and out and everything. And one of the key players gets injured or something happens, then you can forecast or, speculate that the team won't perform as well. And I think that's the same with markets. If you're in tune with markets, you know what it likes and what it doesn't like. You can kind of know, when to get into stuff or when to get out and stuff, and know what's in play at the moment. Do you do any prop firm challenges? No, I don't. I think prop firm challenges are, I think they're useful, but I think they work for a very specific set of trading styles. And I think they may sometimes do more harm than good. And I think that in theory that they're a good way of going about trading. But I'm not a fan personally on how how would I say this? They kind of gamify trading. They prey on people that maybe shouldn't be trading prop firms, and so that part of the prop firm space I'm not a fan of. But I think that if your trading style aligns with the rules of the prop firm, and there will be no issue whatsoever about the way you're making your trading decisions, then the prop firm way could work for you. Yeah, I trade my own account with Awanda. That's my preferred broker because I only trade currencies. My name of my YouTube channel is Aspire Trading, and so my goal is to just document everything that I'm going through, the good and the bad, and share the true reality of what trading is like. Because I think not a lot of people do that, and it kind of creates a false expectation, if you will. And so when I found Nick's channel, actually, I really appreciate the authenticity, and not just Nick, but everyone else. Like every other guest that comes on this show is a legitimate, trusted person. And so I just, took notes here and there, and grabbed from different people's style, and it helps a lot. So if you guys are like really serious and not trying to get rich quick, and if you really enjoy learning about markets, you guys are definitely in the right place. Yeah, H bailout, they take your money and B-book you. Sometimes they don't even B-book you. Sometimes they just have an account in another, or your money in another account, just waiting for you to fail. Unfortunately. My biggest lesson in trading so far. That's a good question, honestly. I'd say that not every move that you're trying to catch is for you. That would be my biggest lesson, is knowing when to stay away, even if the setup, like, there's other variables that you have to account for. Whether it be, let's say you're in a drawdown, or you're in a state of overconfidence, or there's a lot of, news coming up, you know, news events that are about to come out. I would say not every move is for you. Like, don't try to catch every move, and only be selective. Because if you do that, why limit yourself to currencies only? John, that's a really good question. So I actually am looking into going into other, like S&P 500 and commodities. I do want to explore those because, like you just said, I am in a situation where I have to be on my hands, right? And because I don't trade other things, then there's no activity for me. I do trade like the S&P and indices and stuff like that. Well, not trade, but I invest in those in like long-term retirement portfolios. But you're right, I don't trade those. And in moments like these, when there's opportunities elsewhere, it is important to be open-minded and be willing to trade those other assets. So at the moment, I'm forward testing like my strategy on those assets, and they're pretty transferable because all you're looking at is the fundamental picture, and the technical part is really easy. And I think all of us here, like most of the chat here, is really, really, I think, really well talented in technicals. And it's the fundamentals that is the hard part. So with each new market or each new instrument that you try to trade, you have to understand what data is important to that instrument, right? Like if you're looking at indices like the Russell or the Dow, interest rate sensitive currencies, then certain data points are going to really move that. So just knowing the instrument that you're trading. Right now, I'm just in the moment of solidifying a strategy for it and making sure it's transferable. And then I will most likely make that switch this year, make that switch or make that addition this year for sure. Vilaz, what is the lowest amount that you would advise someone to start trading on a personal account? I would say it depends on your goal. If you are trying to like make a living and it'll be like your primary income, then the amount is going to be a lot larger for it to make sense and for you to be able to do that safely. If not, you're going to find yourself experiencing a lot of swings up and down when it comes to your P&L. And that can, psychologically be difficult. But let's say your goal is to go ahead and just make a little bit of side income and supplement what you're currently making right now. Let's say your passion is something else and this is just something interesting, then you can definitely start with a lower amount. And let's say your goal is to just learn, right? One of the things I couldn't experience was testing my strategies and learning on a live account because my previous job was at a bank and I was a registered rep under their broker dealer. So any live trading, speculative, had to be cleared by them. And so I couldn't learn live. And that would have been something that's really important, I think, because when you go live, a new set of emotions come on, you experience like slippage and all these things that you don't experience on a demo. So if your goal, Veloz, is to start learning under live conditions and real conditions, then you don't really need much to start trading a personal account. So it just depends on what your goal really is. Lee James, you were taught fundamentals by an institutional trader, then the technicals came. Yeah, the technicals, you don't have to overcomplicate it. My technical trading is very vanilla. It's just all horizontal levels. I would say most people here have the technicals down for sure. Yeah, risk management is very important. Sometimes you have to take dynamic risks though. Let's say, I don't know, let's say your entry point is this level here, this top level at the 0.575 or the 0.580. It's a good setup, but in 15 minutes, non-farm payrolls is about to come out, right? So that's when you have to use your discretion and dynamic risk and say, one, am I even getting in the trade at all? Or if I am, maybe we don't do 1%, maybe we do 0.25%, to kind of account for that volatility. And then if the trade starts going in your favor after the non-farm payrolls print, then you can start to scale into the trade. But if you just go 1% off the rip and you get stopped out, it's going to affect you, so you have to be dynamic with it for sure. Bashi, Alan, what's your opinion on EU versus GU? The geopolitics with Russia. I think like anything, like for example, the example I'll give is the tariffs, right? I think until something's solidified, then you can make a trade off of it, unless you want to just play the volatility of what comes with. Like for dollar Canadian, I realized that the Trump tariff news was affecting the dollar Canadian a lot. It would have swings of 100 pips to 300 pips and then come right back down. So if you're trying to take that approach, then definitely be careful when you're trading at. Trade smaller for sure. That's what I did with dollar Canadian. Until something is solidified, then you can probably place a long-term swing trade on that. Eric, what do you think of backtesting? I think you learn more trading a smaller live account than backtesting, because backtesting takes away of the psychological pressure. I think both are equally important. I think backtesting will kind of filter if you should continue forward testing. Like if you're backtesting and clearly it's not working out, then you probably don't want to forward test it, because you might be wasting some time there. That's how I'd see it. Hey, Chandler.
Hey, Alan. It's nice
How's it
to
going?
speak to you in person.
Yeah. How you doing?
Doing good. I'm doing good. That was awesome. Your first time by yourself for the full session. That was great.
Yeah. Oh, I'm sweating a little bit, but it's all good here.
Yeah, no problem. No, you did great. I'm putting your channel in the chat here, guys. Go check out Alan's page, Aspire Trading. He's awesome, and he's got a few videos. His channel's pretty new, but he posted yesterday. So that's you're making content. So guys,
Thank you.
go check his page out. He's posting free stuff over there. So it's pretty awesome. Alan, we're gonna let you go. We've got Chris Pulver in the back rooms here waiting to go. And I guess we'll see you next time.
All righty. Sounds good.
All right.
Bye-bye.
We'll see
Thank
you
you for having me.
Of course. See you. All right, guys. We got Chris on the way. We're going to play a quick break, and then we will be back with Chris right after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Tuesday. Welcome back. We're sitting here just off the all-time highs in the SPX. Take a look at equal weight. Hanging on. I'm going to be looking at some positions here. SPX, XSP, NDX, maybe some of the equal weights as well. We're not quite at the highs on equal weight. We go to the NASDAQ. NASDAQ poked. Didn't hold, not yet, but we poked all-time highs again on NASDAQ today. Here's the QQQ right there. Gapped up higher. We are fading. I'm seeing the futures market drop a little bit. Let me go to NASDAQ futures. So just in the last hour or so, we've had pretty much straight down on ES as well as NQ. So if this is going to be leading the way, if we're dropping on futures, I would expect the indexes to be a little bit soft going into how they close today. So gapping higher, again, you're going to celebrate the news. You're going to see it. I wouldn't be surprised if I go to marketwatch.com and it's going to say all-time highs on NASDAQ. But if it closes red today, we'll see if it actually holds that all-time high. That's what happened here on the S&P as well. So this is, I don't think it was at a high. We hit a high on Thursday or Friday last week. So we had an all-time high number one, that is 610.78. And then on Friday last week, 610.99. So that's one high for the year, two highs for the year. Today is right at the same level, but just not quite there to poke out a fresh high. I'm curious what the mainstream news says. Let's go Market Watch. Indexes forfeit early gains after long weekend. Okay, it's at least acknowledging that it's red off the top. Let's go futures market. Futures market is mixed. We're showing Dow futures are down. S&P futures are now flattened out to basically null on the day. NASDAQ futures have gotten into red on the day. Gold at 29.45. All right, we're surging towards that 3,000 handle. Okay, so today's close is going to be important. I said this on Friday, the daily close, the weekly close. We had a holiday with President's Day on Monday, so Tuesday, Wednesday, Thursday, Friday this week is a monthly expiration. Um, I'm as curious as everyone else, like where we're going to be for the end of the week. I did end up taking a couple of early manageable trades. Most of the time, I kind of sell premium on SPX, and I chose a couple of trades in December. We went out about 40 to 50 days, and I'm just saving risk on the trade. I took losses, but rather than taking like a $3.50 loss, I'm taking about a $1.10 loss or a $1.50 loss. So I'm saving myself some reasonable risk there, which I'm comfortable with. Um, and then we'll see where where prices are going to stack up. As far as implied volatility goes, right now we're looking at IV rank of 17.7, which is a little bit higher than last week, not much higher, but we're still in this like low. I'd say like low-ish, not like super low, but I'd say low-ish volatility environment right now. And the only thing that's going to get the market excited as far as volatility goes would be a big, nasty sell off. I don't see any major news this week. I know President Trump is on the calendar for today. If anybody saw that, tentative between like 4 p.m. and let's say between 4 and 5 p.m. Eastern time. It's just going to be talking through executive orders. So whether that is Tariff 3.0 talk, if that gets the market rattled at all, it's after closing bell. We'll see if that creates any type of drama for this week at all. Other than that, I don't really have any major news outside of some rate decisions. We had rate decision yesterday for RBA. They did end up cutting rates 25 basis points. Currency strength today is reflected by everything pretty tight. New Zealand dollar is a little bit softer. Yesterday it was Japanese yen strength. So my Japanese yen futures position, that's /6J, doing pretty well. My FXY shares doing pretty well. Today, the dollar index catching a little bit of a bid. I still think the dollar finds some support around 106 to 105.50. We'll take a look at gold, silver, oil, things like that. Okay. So if we can't hold and sustain these closes above the highs, then we obviously might give some back and dealing with some of this chop. So we could have a horizontal range in here that we're dealing with if price falls back into the center. The other one would be just a little bit more of a top there, or I suppose we could. That's a tough trade. If we went a little bit higher like this, if I connected these recent highs and these recent lows through the election, I'm not saying this market can't find a way to go higher. Okay, but given how we faded off the high, faded off the high, faded off the high, if we end up coming back to the mid price, then I still think this market is a lot of indecision that eventually is going to have to break. But this is also getting like higher highs and slightly lower lows, which could drive traders crazy. And, I'm actually okay with that. Trading through that noise and trading through that chop, I'm okay with. Getting a correction that comes back and revisits these kind of post-election lows, that would potentially be a correction of around, almost 6%. So do we get it? Maybe. Do we not? I don't know. There's no crystal ball here, but I'm still bracing for some type of movement back into my 200 moving average. Okay. I posted a video yesterday on TradingView. So if anybody is in the TradingView charts, you can just find my handle on it's just Chris Pulver with no spaces. And I posted a video yesterday. This is also on my YouTube channel and on my respective outlets and whatnot. But just basically said like 2025 market outlook, cautiously bullish, key bar counts. And I did this for SPY as well as the days we've closed above the 200 moving average on the NASDAQ. The Dow has the same type of bar count. So I'm just a little skeptical of how much more bullish we can get without having like a move that eventually comes down. So look, I could acknowledge this market goes higher, but I think we're going to snap back down into some capacity, having some type of volatility expansion that essentially works both ways. Okay. This is interesting right here. 90% of fund managers say that stocks are overvalued. Call me contrarian, but the pain trade would be that, unless fund managers are actively short, just saying it is nothing. If I've seen like active managers are currently short, then they're idiots and they'll probably see the market go higher. That's the pain trade. But if it's just a comment, it's just a comment. All right. So anyway, that's where we're at. Will we close above the highs today? We'll find out if we see a red candle today. I mean, futures is still kind of drifting lower. Look at this. I mean, in my opinion, futures leads the way. So if we're seeing fresh lows over these last 60 minutes or so in futures, does that drag the indexes down lower? It's very possible that off these highs, this is SPX. We are not quite at the all-time highs. If we end up pushing lower, okay, fine. XSP, same thing. SPY, oops, just off the all-time highs. Poked higher on the Qs, but we are fading back in. Equal weight, same thing, poked to the highs, fading back in. Dow, go to this chart here for the Dow. Not quite at the all-time highs, a little bit of a compression on the Dow. Either we are going to squeeze into this to make a decision, or we are at the highs, but we are going to fail and maybe come back to range levels and find this 200 moving average. So again, if you're patient, I'd like to wait for dips to buy. I just don't know if we're going to get it. Oh my gosh. I think my Discord server just got hacked. Yikes. What the hell, man? Like, I have such a simple Discord channel and it's just a joke. So dumb. Give me a second here. Good Lord, this is everywhere. I'm definitely not going to spend all this time babysitting. Cool. Well, that makes Discord less fun. I might just close the whole thing down. This is annoying. All right, back to the charts. Dow. I'm still looking for a correction back in the 200 moving average. S&P, still looking for a correction back into the 200 moving average. This doesn't make me bearish, okay? It just makes me cautious of how much higher we can go without having some type of move back into it. Or at the very least going nowhere, okay? Going nowhere and letting price just chop around as this moving average in red catches up. If it catches up, that's fine. But to me, that's the dynamic support that I'm still going to look for in the market. All right. RBNZ is expected to cut rates this week by 50 basis points. And currency strength this morning looks like it's reflecting that kind of anticipatory news that is coming out today, I think, after market. So we have RBNZ today. That will be around 8 p.m. Eastern time, looking at a 50 basis points cut. That makes this whole carry trade a little bit more interesting. You're starting to see more central banks cutting. We've gone from everyone raising rates and pausing following the Fed's lead, and now we are noticing that there is a pretty substantial monetary policy divergence where banks are cutting rates, Fed is pausing, holding rates, getting the cut kicked down the road out to like maybe September or October of this year, and only one cut from the Fed is anticipated. Inflation prints last week certainly didn't make the Fed's case any better for cutting rates this summer, so it's been pushed out into the fall. If the markets are lucky, they get one cut this year. If the Fed stays hawkish, they might get 0 cuts this year. If the Fed is lucky, they don't have to do anything on monetary policy and just let inflation kind of naturally work its way lower. Let's take a look at dollar and yields and things like that as well. Okay, so let's keep going through our Russell is hanging in there. IWY just off the highs. I'd like to see some more chop in this. This is top 200 growth for Russell. I like this consolidation. If we can pull back a little bit into this one, I'd really like a pullback towards this 200 moving average. And I'd be looking to add some more shares of IWY, which I have. IWX, this is also top 200 value. This would have been a nice one. I missed that opportunity right there around 78. That would have been a sweet little index trade. At least, top 200 value just to be diversified. I think there's some potential for small caps this year versus your traditional large caps, but I think the market needs large caps to perform well and be stable. I think Mag 7, Mag 8, or whatever what the heck you want to call them, Mag 7, Elite 8, Fantastic 8, who gives a crap, but they need to perform well. They need steady. They need lots of cash. They need lots of strong fundamentals. They need to stay resilient. If they turn over, this should be everyone's legitimate concern. If Mag 7, okay, if Mag 7 holds here, then there's going to be some resiliency in the market, but maybe not any big time direction. But if this pulls back, and I'm curious how this all looks like individually, if you look at Apple or look at Microsoft or Google or Tesla or Meta or any of the Mag 7, do they pull back towards this moving average first? And if so, is that a buying opportunity to get a dip? Yes, no, maybe. Percentage wise, that actually would be a pretty strong drop. Let's say we find that 200 moving average. That's a 12% correction on Mag 7. That's pretty decent. Now, respectively, each stock might be bigger than that. We might have like a 20% correction on something. But I think that also offers up an opportunity to at least look to sell some premium, trade some options, or even buy some shares. But Mag 7, I think, has to stay resilient to keep this kind of risk appetite and resiliency in the market. VIX 1 day surprisingly down 29.61% at these highs. VIX 30-day is up and elevated a little bit. We had lows from Friday around 14.75. It's up to $16. We're still kind of trading a lot in the teens on the VIX. Anything at SPX500? No, just waiting. Dollar index. I still think there's some room to fall into this like 106 to 105.50 area. I am only in, I think New Zealand dollar long is my only position right now. As far as dollar pairs, I closed out of Aussie dollar for a winner. I closed out a dollar CAD for a winner. I closed out a dollar Swiss for a winner. I'm not in dollar Swiss. I'm not in euro dollar. Euro dollar doesn't look like a bad short to me. So playing the euro dollar, I don't mind this right here. So if we went dollar, it's basically the inverse of dollar index, right? If I think dollar index has some 106 to 105.50 support looking for a bounce, if I were to look to short the euro dollar now, I think this going back down to the lows seems reasonable with a reward to risk that's favorable. So there's a bit more reward here for risk. Okay, so about I don't know, maybe 1.5 to 1, maybe 2 to 1. And obviously that big discussion if we get to parity, 1.00 would be obviously even better reward to risk. So as long as we are, and I'll make this, if anybody's trading this, it's like trade small, maybe stack in some sell stop orders. If we break these lows, go to parity 1.00. But as long as we stay less than 106, if we stay less than 106, I'm looking to be bearish and stay bearish on euro dollar. ECB is cutting rates, Fed is not. Maybe that makes this a little bit more attractive. This ranging a little bit longer is fine, but if we get back above 106, I want to see even on this daily time frame, the daily candle would have to close above this 200 moving average. It hasn't done that since we turned the corner back in October, November of last year. So to me, this is a good spot. There could be some noise here with a little testing of those highs, but if we just come right back down to range levels, I mean, I don't mind that trade. So profit target 1, if you want to hold on for more, see if it breaks, go to parity. Profit target 2 would be parity, and then trailing stop losses down to like 96, which is where we were before this thing bottomed hard. Okay, but I think this looks fairly reasonable for a short on euro dollar. Pound dollar, I actually don't like the pound dollar that much. Pound dollar, if it turns, I would wait for a trend line break into this. We get a trend line break right there, then I would look to resume some selling pressure on pound US dollar with stop losses above a U-turn high. Watch out for a test or a fake out of that high, but I think there's going to be a pretty decent rejection area right off the daily 200 moving average or at the backside of this trend line. So somewhere in here, I would look to see if this will kind of roll over, give us some confirmation, stop losses above, and then trade to either same lows or fresh lows. And again, look for your potential reward to risk. If you can get your reward to risk set up bigger in reward than risk, that looks like a pretty good trade. Okay, let's go oil. Oil still pretty choppy for right now. USO oil futures. I closed out my iron condor for a little winner. I'll take that trade. I'm not going to do anything else right now. I don't know if we're holding this floor. It seems like we are. I'm just not taking the chance on this thing potentially breaking. If anything, I would say with oil, if I can position for defined risk down here, this is probably what I'll wait on for oil. If we end up coming back down, maybe we don't do this at all. Maybe this is, breaking the high from this recent swing. Maybe this is a swing up, a basing, and then oil prices are going to start leaking a little bit higher. Maybe. Otherwise, if this is a floor that continues to be defended, then we come down into this level around like $66. I'll probably look at some defined risk trade on oil futures and just do like a bull call spread. I can buy a 66, I can sell a 67, maybe get like a 1.25 reward to risk or something going on this trade. That's what I was doing back here for a few months. Once we got back in the middle, so we had this big swing up and down, I did an iron condor where I sold, a bear call spread above and a bull put spread below. And I went from 20 cents, closed it out pretty quickly within about a week or two for 12 cents. So took a partial win there. But that's about it right now directionally on oil. I just think we're going to deal with a lot of indecision. Natural gas, on the other hand, I'm long on natural gas and I'm liking this trade. Hopefully we start making some fresh highs again and resuming the upside. XNG, this is natural gas index. I want to take a look here and see unleaded gas futures. Is there a feed for that? Let me go gas futures. So we got nat gas futures. Son of a bee. I'm just looking for like pay at the pump prices or just unleaded. I don't want Singapore unleaded gas. Nope. Fudge. All right, let me go AAA fuel prices. Average 316. Let's go back to the last. Let's see. We go a month ago, 312 up to 316. So we're higher. A year ago, slightly lower. But off the recent lows, we were down to like $3 national average. Now it's at 316. So I'm trying to find a chart for just the pay at the pump because consumer-wise, inflation-wise, energy-wise, that's also a good sign of like sticky inflation. Okay. Anyway. All right. Gold. Gold, green on the day. We had recent highs that were slightly higher, 29.43. We're at 29.27. Again, this might be just kind of walking towards that round number at 3,000, which is totally fine. I'm still looking at a pretty high bar count on gold. I wouldn't be surprised if this thing is making its kind of final run into a level where once it is ready to turn, I do think gold has pullback potential. I do think in this dynamic support level, pullback potential. I'm long gold, and I'm still going to stay long gold even if we get a dip and a pullback. I'm going to remain long gold, but I'd prefer to be buying some type of correction. So I'm holding my shares of GLD. I've got some credit spreads running longer. Those are all looking pretty good. Question I have is if silver can also match the enthusiasm that we're seeing for gold. I would love to see, even if this is choppy, I'd love to see silver still making higher highs and getting up to a measured move around 35.88. I do have some sell calls on my SLV. I've got a bunch of credit spreads and some other options there. I've got some SI futures as well. So I like silver positioning wise a little bit more. I guess you can call it poor man's gold. But XAU, XAG comparison, we're sitting off these recent highs on the range. So this resistance, this support, if this resistance holds, I would like to see silver get the bid and get the upper hand a little bit. Okay. Bitcoin. I think I'm going to look at some fresh positions today on Bitcoin. I might just do additional accumulation. So probably some IBIT, FBTC, just a spot price. A lot of consolidation. And I expect that to be the same. We might pull back to like this 91K support. We might come back up here towards 107, 108. More accumulation, I think is the play. If we're at a spot that's low enough, could we pull back lower? Sure. Be aware of this. But if I add a position, I'll just put a plus sign here. If I add positions, I would add around that 92 to 91,000 mark. And if we pull back into, let's say, 85 or 80, I probably add another position or two in here. Do we get to 125 this year? Maybe. Do we get to 150 this year? Maybe. We obviously have to break the highs to do that. I think the markets themselves, I mean, we've got to see the indexes probably creep into all-time highs with some momentum in order for Bitcoin to do the same thing. I don't know if the big news is going to be, the US has to establish some type of strategic reserve or some type of like straight up buying in Bitcoin. I don't know what that means or what it looks like, what it takes, what it requires. I don't think it's easy as just the president saying we're going to do it. So there could be the same thing we saw last year, which is a lot of accumulation before we got that big surge after the election. We could be doing the same thing here if it's like, okay, wait and see, but I don't mind having some accumulation just in case. I do believe there's a lot more widespread adoption. I do believe there is a need for dollar alternatives, and I think that other countries are looking to go non-dollar related. And so rather than lining up behind BRICS, which would be like your China, Russia, I mean countries that arguably are not going to be like the strongest to follow. I still think Bitcoin could be like that stronger decentralized alternative. But price action wise, it's not nearly as exciting. And what's funny is all your crypto peeps are probably nanosecond attention spans, and this is making them bored. So what are they doing? Is they're playing the altcoin market, they're playing the meme coin market, and they're getting burned because altcoins, meme coins are doing like they're trash right now. I mean, has anyone looked at Fart Coin? Is that a thing? I don't even know how to find it. Fart Coin USD. Okay, how's that for a pump and dump? So you're bored with accumulation of Bitcoin. So what are you doing? You're chasing garbage, right? And in this case, you're literally chasing shit. Not really, but you get the point. But it's crap, right? And you go to Trump coin, Trump dollar. I don't even know what this is. Same thing here. Trump went from $5 billion to nearly $20 billion, and he's back down to, maybe 8 to 9 to 10. It's just, this is what's happening in the crypto space. This is not what I'm interested in. I am fine having some strategic allocation on Bitcoin. I think that's fine. I can accumulate, see some stability. I'm fine with that. All the other stuff, I'm not interested at all. Okay. All right. Other stuff, MicroStrategy, stable. I've got this one with an expiration into March. As long as it stays above 310, I make a pretty good chunk of profit. I might look at a roll on that today, actually. Might look at a roll on that. That would be MSTR for roll. Okay. Let me see Meta really quickly. Meta had like 20 some days in a row. Oh, damn it. That's what I was looking at for this week. It finally made headlines like it had, 20 to 21 winning days in a row or whatever, which wasn't quite true, but we had a lot of closes higher. I'm not surprised it's going lower. Netflix, nice little red day on Netflix as well. This should bring my butterfly back into play. Let me take a quick spot check on my butterfly trade. So Netflix, right now, broken wing butterfly, 1, 2, 3. Okay, so the good thing is I'm right in this profit trap window. I just need a little bit more time in the trade. So we'll see how this week kind of stabilizes or sells off. Going into these monthly expirations, though, part of me would like to see like this stock fall a little bit. Actually, I wouldn't mind if it falls a lot a bit, but I need pin price would be max profit around $1,100 if we stay at 1040. If we're down below that, I still make about 110 bucks. So I'll keep an eye on that one. I'm totally fine with this one, selling off. We're at 1065 today. It's down 30 bucks. Not bad. Hopefully there's more to go. Again, just give me a pullback, man. This one hasn't had a pullback test of the 200 moving average for over 300 bars. So again, decent stretch, decent bar count, and decent stretch away move. This is another thing that you look for these 200 moving averages, the percentage away from it. Okay. How many times have we seen Netflix get 27% away from the moving average? Probably not very often. Even right here, when we put in a high, we were only about 19% away from the moving average. So my point is, like, it gets pretty overstretched. There's about a 32 to 33% move. So, okay. And then what it do is spent months pulling back. So anyway, we'll see. We'll see if I time it right. I've got about 10 days left in the trade. But if I can get this, working through and staying in my profit trap, that'd be good as time gets towards that 20th expiration. All right, I don't mean to skip ahead here, but I was just curious. So we'll go back to Bitcoin right here. Probably looking at accumulation on some IBIT today. MicroStrategy is fine. Coinbase pulled out a little earnings win last week, which I'm happy with. Now I have some ratio spreads. We had a miss. Nope, actually we did top bottom was good on Coinbase. So I've got some ratio spreads and some 111s there. Ethereum still needs to break this trend line. Japanese yen, kind of loving this trade right here. If we get above these highs, I have a bull call spread that my risk is 687 for max profit around 1,200 bucks, just shy of a 2-to-1. But I like the trade and I'm long Japanese yen. This is my favorite way to trade it as opposed to trading Japanese yen in currencies because I don't want to pay the negative swap. If we go to FXY, I own some shares of this instrument and I own some shares around $59. We're looking to see if this has any return back into the mid 60s. Okay. Outside of the US, markets are doing well. I talked about this a lot in my trading view video that I posted yesterday. Non-US markets are outperforming the US. German DAX is crushing it this year. No signs of stopping. I do think this has to have some type of pause or pullback, though. Again, the stretch away move is getting to be like kind of a noxious distance away. So just be mindful of that. I think a pause or pullback would be great to still buy a dip and get a resumption of this trend. The FTSE just off the all-time highs, but man, this DAX is like one of the best performers this year so far. Argentina still looking for some indecision. Hopefully we'll find this 200 moving average. China pulling back a little bit. I'll take a look at some of those China stocks. Brazil moving nicely off the lows. I have some shares of EWZ. Mag 7, here's Apple right in the middle, kind of a high-low range. Amazon falling down. Crap. I knew I went out to the wrong. I needed this to get below 222. I should have went out to the monthly expiration. That's my bad on my newsbreakers. Google, fine. I'm dollar cost averaging in. Meta selling off the low or the recent highs. MicroStrategy, no pulse right now. We've just sold off, which is fine. I just did a little dollar allocation in at 416. Netflix, nice little sell off here. I'm happy to see that. I need this thing to stay below 1040. Nvidia, we officially filled the gap. I closed out my profits on my bull call spreads. Now it is ratio spreads and a bunch of naked puts or cash secured puts because I don't mind owning the shares. But I did that right at the 200 moving average. So more chop ahead. Keep an eye on that MAGS, MAGS. Actually, let me add in MAGS to my. I don't care about triple leveraged. Don't ask me to trade double, triple leverage stuff. I'm gonna put this up for my charts here for Apple. There we go. So right above this. Now I have just a spot check on whether MAG 7 is up or down. Okay, Tesla. Off the lows a little bit. We came down and tested 325. We're up to 355. I'm still looking at Tesla as a possible accumulation. Also, we hit symmetry on this correction. So high, low, lower, high, lower, low. And you can see that little bounce is pretty good timing right there. Timing that bounce. And I did add some shares in. I got filled at 360, 250 for a small allocation. Got another position pending at 285. And lots of income trade opportunities from this week expires. This one's going to be full profit. We're probably not dropping to 275 today or this week on Friday. So this is going to be a full credit of $2.28. So it'll be a nice little winner on Tesla this week. I'll add that up. And then for March, very similar, $2.17. We have to go all the way down to 255. So most likely full profit. These trades as well, probably full profit. I don't think Tesla's really going back into the 250s. It could still just continue to wane. But this gap fill, I think there's going to be plenty of opportunity here. Once we get on the right-hand side of the trend line, I want to see some Tesla momentum, see if we can get back to these highs. Does it do it all by itself? Probably not. We probably need to see some risk appetite as well. Okay, and I am surprised with how stable the indexes are today. Berkshire Hathaway almost all the way back up to the highs. That ratio spread expires in March, looking pretty good for a couple bucks profit. Bonds, TLT, right at the backside of this trend line here. It's hanging in there. It's surviving. This is going to be an interesting breakout. If we get a breakout on TLT, that's good for yields to be dropping lower. Not there yet. We're still not. This would be my left side of the trend line. right side of the trend line. But if TLT can make a break above, let's say 90 to 91, that's probably making a pretty strong case that the bond market is looking better and yields hopefully have some more downside. 10-year yield is really, really volatile, but hopefully we are doing something along this line where we have a fall pullback and then another fall pullback. I'd like to see another fall. So in the low fours would be kind of nice. I don't know how much trend direction we're going to see here. I really don't. If we get down to these lows again, that would be fantastic. But something tells me with higher inflation readings for like 5 months in a row, we're probably not going too much lower than like, I'd be shocked if we're below 4%, to be honest. So we're probably going to stay sticky around this like 4.2 to 4.8 window. I would just be expecting a lot of back and forth and higher for longer. All right, bunch of future stuff there. Spreads are still relatively tight, which is good. Here's some China stuff. So HSI is up. CQQQ gapped higher, fading a little bit. Alibaba is just on a runaway train, which I am loving. Up 60%. Wow, that's crazy. 60% since January. Alibaba's doing pretty good. So my overall position, Alibaba, I've got about $10,000 on Baba right now. Question is, do I want to take some profit on that? That is I suppose that's the $10,000 question. I have some good positions. I want to see if there's some momentum. So if we have a push and a pause, I do think Alibaba has room to go higher. Man, I mean, we could be eating into these gaps in the 130 to 160 zone. I mean, if this is it's not quite a perfect double bottom. Like this would be my double bottom. But even if we hit symmetry here, this is what I was targeting in the first place. So we're right there at symmetry. That's a good profit target. Let's see. We are above the yearly 5 period. We're in a buy zone for everything on the daily. I think if we go up and we flag, I'd like to see some more upside. I hope this doesn't just get faded all the way back down. The reason I'm just looking at this one is I don't have anything covered on Alibaba. If I wanted to take the profit now, I would probably take the profit, close out 10K. That's cool. I'll be happy with that. And if I bought more shares, I would put in a collar trade. So if I bought shares, I'd buy a put, sell a call, and if it went higher, okay, fine. If it goes lower, I can protect some downside there, just in case this thing is not as efficient. I think we could still go higher. I really do. I think this whole idea of like lifting animal spirits and maybe having some positivity and all-time highs in the U.S. and China's doing well and Germany's doing well and non-U.S. is doing well. It's just so aggressive with how it ran. The thing ran 60%, in about a month. And we also have earnings on it this week. So we have earnings on the 20th, which is what, Thursday morning. We have earnings. So if earnings comes in positive and we get another surge higher, I might look at closing out the gain. And I don't know, I'll consider reestablish position. What is my potential fair market value on Alibaba? Oops. So it's getting closer and closer to fair market value. Price to earnings multiple is up. Obviously, stocks can be overvalued. Interesting. All right. Well, I might I don't know. If we're sitting here like ripping higher prior to earnings, I might take profit. I might look to see if the earnings pop is going to be positive. I mean, we've had a pretty decent earnings momentum streak here. Problem is the stock didn't do anything. But I look back at these previous highs, like clearing that high is kind of a big deal. Staying above this recent resistance would be a big deal. I think if we can get a bull flag out of this and maybe get a bit more momentum to the upside. Let me see if there's momentum that's waning on this. Let's go Alibaba here. Okay, there's still momentum here. So I'm going to look for something like this. If I start to see that my oscillator starts to change, we'll see. I'll see if we can go like just a little bit higher. Let me check on momentum. Let's go to a momentum oscillator. That was a nice little consolidation zone. One more workspace to pull up here. All right, let's check this one out. Alibaba. Okay, so we do have some overbought conditions. Not a surprise. But once we hit overbought right here, we still had some upside potential back in September of last year. So there's still some movement potential. Also, if we're making higher highs with this disagreeing or with this disagreeing, which I don't see right now. So on the daily time frame, I don't really see the disagreement to say I'm going to hold off or I should be taking profit. On the weekly chart, I don't love that. That's a weird print though. That's a really weird print actually. Weekly chart, we're above the 200 moving average. I mean, I think we got to get something started here, man. Like going back to 2015 to now. I mean, we're talking about a decade. It's like this thing has been bottoming out for a decade, looking better. I know it's had 2 big surges and it's been a fast mover, but I mean, even if this was a high low, even if this was your high, this is your low, and we just pull back like to the 38 to 50% zone, I think I'm just going to hang on to it. So let's go high to low. Okay. I mean, even a 30% pullback gets us up into 138, 139. I'm okay with that. Getting back to a 382 is a 160 price point. Okay. All right. I'm good with that. I'm going to hang on to this a little bit longer. I think a 150, 160 exit point to me would be fine on Alibaba. All right. I'm willing to ride it out a little bit longer. Baidu, saw this thing gap lower. They had earnings today, positive, and yet the gap was pretty strong to the downside, which isn't bad. I own some shares. I've rolled this up to like 100 by 105 by 110 covered call wise. So now these covered calls are probably looking a little bit better. My break even's in the mid 80s. I'm gonna try my hand and hang on to this as well. So any China exposure that I have is pretty much through these few stocks. FXI, I did have some shares. I let this one go back in September. KWeb, same thing. JD hanging in at 39. I've got it covered at 39. Earnings is early March, and I stand to get it called away right now, just at 39. I think I'm just going to let it hang out and get called away, unless I can get a really nice roll out of it. But right now, I probably can't. Schwab dividend, Schwab growth, fine. Advanced decline line, how many stocks are above the 50 moving average? NASDAQ, how many above the 50 moving average? This is interesting. This is also a timing indicator for me. If we start to see NASDAQ 100 stocks above the 50-day coming up into like, 92, 93%, to me, that's a signal to get short / protect some profits, maybe even hedge the indexes, but we're not there yet. And then same thing on the S&P. Right now we're in the middle. So S&P might, broaden out a little bit, but if we get up into this area, I'd be saying looking to hedge or be protecting some profit. We had a chance to, get the dip with some of those corrections we saw back in December, which we were pretty aggressive on some of those dips. All right, other stocks, Costco pulling back, Walmart pulling back, Nike working nicely off the lows, Home Depot lows, nothing there. MasterCard stalling, Visa still making some fresh highs. American Express off those recent highs. Johnson & Johnson, that's good. Look at that recovery on Progressive. Insurance, CB's not doing as well, but Progressive, the flow keeps flowing. Still working out. Palantir, fading a little bit off these recent highs. That's still just a ballistic stock that probably needs to come back and have a reality check. Carvana, I took a trade on this last week. I'm looking to see if Carvana with earnings this week can get above $300. Redfin, Zillow, Nothing there. Sector-wise, XLC, which I'm in, this one's looking good for full profit. XLY, still some sideways. XLP, a lot of volatility there in consumer staples. Energy, I just did some cash secured puts here for diversifying. These are probably fine. Financials, surprisingly, one of the better performing sectors this year. This is healthcare coming off those lows, which I'm good with. I think healthcare sector is going to continue to grow. What do we have here? Industrial. I mean, if the AI energy play infrastructure is going to work out, it's going to be an interesting year for industrials, basic materials. I mean, this one doesn't look bad, honestly. I wanted it to come down a little bit lower. It's right at the 200 moving average. But if we put in a bottom here, we could be looking at a breakout in XLB. I'm not super stoked about that trade because it's, as a sector, it's like low premium. If you go individual stocks in the material sector, they're not really that exciting as far as the option trades go. Real estate, probably staying out of that one for right now. XLK is tech. We're up towards those highs. Utilities, probably find lots of dividend plays in there. All right, I'm going to wrap it up. Any other questions for me? That was kind of a full top down. We did some currencies, did some stocks, options, did some dollar, gold, oil, silver, some crypto. I think I'm good. Overall markets on the day, surprisingly calm on the index side, even though we are getting some reasonable volatility elsewhere in individual stocks. I'm looking at a fair amount of indecision today. We might just have some indecision today. We are sitting here near these all-time highs. Question for this week is, are we getting to these all-time highs with some momentum to the upside, or are we going to say, congratulations, we poked the all-time highs, but it's not good enough? I don't know. Trump speaks today between 4 or 5 p.m. I don't know what he's going to say. It might be patting himself on the back for all these tariff talks. I don't know. We'll see what the market does tomorrow. But I've got some trades to hammer out here, some positions to consider. Alibaba with earnings this week. I'm up a decent chunk of profit. Part of me wants to, share-wise, I might just take some of the profit. I still have a bunch of ratio spreads, which I'm going to let those expire. Those will be fine. I think those are going to be fine. The question is, I'm really getting that kind of juiced grunt to the upside. I obviously want to start trailing. That's a big move. I could see us pulling back. But the nice thing is let's say we run like this and we pull back and we have, okay, everyone that missed the trade can now start to buy a correction, right? Any type of pause, hesitation, dip. If we have another push higher, then I'd say, okay, now we're into this open space. Now we're looking at maybe, momentum and price disagreeing. Then I start looking to take profit. We hit some fresh highs. So I think I like the one, I'd say the 140, the 140 to 150 play price target wise. I'm pretty happy with that. So I think I'm going to hang on to Alibaba a little bit longer. Gold's probably on the march to 3,000. But I think we're still due for a pullback based on a bar count. I'm not getting short on gold. I just want to add levels, but I need a pullback. Euro pound, I see the request there. I don't know. Nothing. This pair moves like 30 to 40 pips a day. It's the most boring currency pair in the world. I took a long position here for some profit. So long, took a short stab at that 200 moving average. If this eventually breaks a trend line, there's a strong case for support here. My only concern would be, which central bank is cutting more, right? ECB and Bank of England are both starting to cut rates. ECB is probably a bit more dovish. If we pull back into, let's say, Brexit levels, I think that's still a pretty good case of lots of support in here that's going to base and build. So I don't know. If you trade it small enough, you're not really going to get a whole lot of trouble on Euro Pound anyway. I've got a robot trading on this currency pair for that reason. I know it's had some wild and crazy stuff, but it also balances pretty quickly. So I trade like a little grind robot in this one that does just fine. But that's about it. Okay. All right, buddy. I'll let you go for today. Come back and do it tomorrow. All right. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.